Accounts define the structure of your financial system. In this class, we're going to talk about what accounts do for you and the account hierarchy used in CenterPoint. Your accounts describe the movement of resources within your funds. Accounts are used in transactions to record financial activity and to summarize that activity in different reports. Your accounts represent a financial picture of your operation at any given period of time through the balance sheets or income statements or various other reports available on CenterPoint. But that financial picture is only as accurate as the account activity that's entered into your data. Your accounts are the core of your financial data, and a transaction cannot be entered without an account, and CenterPoint makes sure that every transaction posted is a balanced transaction. Now let's take a look at the account hierarchy, which begins with account types. The account types are predefined and follow accounting structures. Beginning with balance sheet account types, assets are the items of value that are owned by the funds. Liabilities are debts or obligations owed to someone else. And your fund balance represents the surplus of each fund, represented by investments and accumulated net surplus deficit of each fund. And then the income statement account types begin with revenues, which are the different ways you generate revenue in the different funds, and they increase fund balance. Your cost of goods are the specific expenses that are directly related to producing that revenue. And expenses are the costs of operating each fund. Other revenue and other expenses are income and expenses not directly related to the revenue that each fund is doing, such as gains on asset sales for revenue and transfer expense for other expenses. Each one of the income statement account types is represented on the balance sheet through a fund balance account. And the revenues and other revenue will increase fund balance. Cost of goods, expenses, and other expenses will decrease fund balance. Now let's take a look at the account hierarchy, looking at an account type of expenses. And the next level is account category. The account categories organize the accounts within each account type. And each account category has specific characteristics for whatever that category is managing on the type of account it is. In this case, we're looking at 3 account categories under expenses, and we have utilities expense, repair and maintenance, and labor expense. And the next level under account category are your accounts. The accounts are where you're actually posting your account activity. You can have up to 3 levels of accounts. It's completely customizable for what you're needing for your reporting purposes and management purposes. So in this case, under utilities expense, we have 3 level 1 accounts of electricity, disposal, and communication, but the administration wanted additional information for the communication expenses and broke that out to a second level of telephone and internet service. And in addition to that, they wanted more detail on internet service, but not necessary to see that detail in all reports. So that's the reason for doing the different levels, because your CenterPoint reports will have the capability of reporting at these different account levels. So when you're entering your transactions, it's always going to be the lowest level, the lowest postable account. So in this case, under communication, you won't post anything to communication. You won't post anything to internet service. You'll be posting to telephone. That's the lowest level on that one. And the lowest level for internet service will be internet fee and internet equipment. When you're running your reports, if you're running it at a level 3, then you'll see separate amounts for internet fee and internet equipment. If you were wanting not quite that much detail and ran the report at level 2, then you would see internet fee and internet equipment summarized into internet service, and you would see telephone and internet service. And then if you summarized it at level 1, you would see all telephone and all internet service expenses under communication. And still, you can summarize it at the account category level and see all of this activity under utilities expense. It really is just a matter of matching what you're needing for that particular reporting purpose. All of your accounts are customizable as far as the name and the abbreviation, the account number. They can be whatever you want them to be, and they can be changed later too. If a particular abbreviation isn't working for you, you can always change that later. So now we're going to go on and look at account categories. I should also mention that the level of accounts that you use in one account category doesn't make any difference as far as what you use in other account categories. For example, under repair and maintenance, all of these accounts are level 1. Under labor, we have 2 level 1s, but we broke out one of the level 1s into 4 different level 2s. And again, they can be summarized at those different levels when you're reporting. Now let's go look at our account categories. And we're going to go to Setup, Accounts, and Account Categories. This is a list of your account categories, and currently they are being ordered by sequence. The sequence number is representing a number that is ordering the different account categories for financial statements of how they're displayed. So you can see that first we're seeing all of the balance sheet accounts of assets, liabilities, fund balance, and then we get into our income statement accounts of revenue, cost of good, and expenses. You can create new account categories if you find that there is an account category that you have some accounts you want to separate into a separate account category for reporting purposes. We can create a new one. And that can be done either by clicking the New button down at the bottom, or you could highlight an existing account category and use the Copy button. So, for example, if we wanted maybe a new account category for payroll taxes, to keep those separated out of labor expense, we can highlight labor expense, click the Copy button. That would bring in the information that was there from labor expense, and now we can make our changes for our new account category, and we're going to call this payroll tax expense, and we're going to give it a new sequence number, and it is of the account type of expenses. The class is representing ways to separate out each one of the account types and create labels on financial statements, and then subclass is an additional level below class, again for financial statement reporting purposes. So if we look under class, the only one available for expenses is general, but if you were in a new account category that was under assets, then you would see different classes for current assets and intermediate assets and long-term assets. So it depends on the account type as to what's available for class and for subclass. And under subclass, we have depreciation expenses and interest expense. And again, it's just for financial statement reporting purposes. And also over on the balance sheet information on the balance sheet groups, it's for display purposes for balance sheet reports. The other thing that account categories do is maintain other pieces of detail for particular account categories. Let's go ahead and save this particular account category, and that added our new account category. And now we're going to go up, and if we were looking at an account category for cash, any accounts under cash would be the accounts that you would see on a lookup in a cash payment or a cash receipt screen in the bank account field. That's defining those. If you were on a vendor invoice and we went down to liabilities, there are accounts payable, and those would be the accounts that you would see in a vendor invoice, or a credit card accounts for credit card purchases if you're using those. So the different account categories are also instructing what type of accounts you should be seeing in different parts of the program. If you were looking at an account category for a long-term debt, then accounts under that particular account category would also include details for accrued interest and interest rate and interest number of payments and type of loan, those type of details. Or if you were under an asset account category for machinery and equipment, you would have fields for depreciation expense or purchase date or sold date, different pieces of information for that particular account category. If we look at our inventory account category, another thing that account categories do is gives you the ability to maintain balance details if you want sub-ledger balances on a particular account. For example, if you are dealing with inventory, perhaps you're selling products to your different people that you are doing business with and maintaining an inventory, and maybe you are storing that inventory at different buildings, then you could have those balances of what you have on hand with a subledger balance at each one of those locations. If we have inventory location and move that to the right, now all accounts that are under the account category of inventory are going to be maintained by a detail of inventory location. So if I purchase something, I would be indicating what inventory location it's going to, and all of those different locations would have a separate balance. So just another thing that these account categories can help in your managing your different balances. And then the templates tab is also maintaining the default template used for the accounts in that particular account category. And what templates do is creates a pattern that identifies the accounts that are posted in a particular financial activity and whether those accounts increase or decrease, and also what other details that you might be maintaining on that financial activity, like a department or perhaps a location. And in that template, it's also making sure that the accounts that are being posted are creating a balanced transaction and that the details that you want maintained are on the accounts where you want it. So if we are in this example, is an inventory, we're on a payment. So if we're purchasing inventory, we have this template of DT increase asset. If we were selling this inventory and we go to the receipts type of transaction, it comes up with a template of DT sell resell inventory, which in that particular activity, what we're doing is not only decreasing that inventory and offsetting it with a cost account, but we're also increasing the bank for the amount that we sold that inventory for and increasing the revenue of what we sold it for. So there's multiple things happening in that transaction, and the inventory is getting reduced all by using this particular template, but it's doing that work for you just by you entering the information that you know, and it's doing the other calculations for you, making it a quick and easy entry for you. So that default template is set at the account category. The template can be overwritten at the account if you have a special account that needs a different type of treatment for that activity. And you can also get your list of the different templates that are available by clicking that lookup. So those are some properties of what account categories are maintaining for you. And next, we're going to be looking at accounts in our next session of the account setup and creating new accounts.